All right, hello and welcome everybody. This is Erik Luhrs, and thank you all for showing up today. I know everybody's busy. Either you're eating your lunch if you're on the East Coast, or you're eating your breakfast if you're on the West Coast, and if you're in between, well, then maybe you're snacking on a popsicle or something. So, but I know I know everybody's busy. Everybody wants to get right to the good meat, and we have some definite good meat for you today with our guest Sandy Botkin. And today's presentation is keep more commissions with tax breaks. Now, let me tell you a little bit about Sandy. Sandy is an attorney and a CPA and the CEO of the Tax Reduction Institute. Over the past 20 plus years, I should say, Sandy has taught thousands, probably tens of thousands of taxpayers how to save millions of dollars on their taxes. Now, prior to joining the Tax Reduction Institute, Sandy worked with the accounting firm Touche Ross. He also worked as a legal specialist in the office of the Chief Counsel for the Internal Revenue Service, the bad guys. No, I'm just kidding. He also trained new attorneys who came into the Internal Revenue Service's corporate tax division. Now, Sandy has authored numerous publications. He's lectured to tons of professionals and trade groups and has served as an adjunct professor at the University of Maryland and Columbia Union College. He has also appeared on various media outlets such as Fox and CNN and all them other stuff. All the ones that we know, which we know then he knows what he's talking about. And Sandy is also the author of the best-selling books Lower Your Taxes Big Time and Real Estate Tax Secrets of the Rich. Sandy, thank you for being here today.
Oh, thank you, Erik. I got to tell you how honored I am to be here associated with you, and I'm very honored to be participating with the Guru's selling system. And I want to welcome everybody. And by the way, I'm also very honored to be speaking to you, mostly self-employed individuals. I mean, heck, my parents were self-employed. I'm self-employed. So I really respect those that want to take a little more risk in order to make a lot more money. Now, I want to mention a couple things about the logistics about this program. This is a very content-rich program. So I am going to move. It's a 30,000-foot overview of what's in my videos and in my books. So you want to get a paper, you want to get some pen, because I am really going to move. But the good news, besides giving lots of good information, is that all of you will be getting a link where you can go on and actually see the recording and see the slides presented in the program. So all that will be available to you. Just click on a link. In addition, at the end of the program, we're going to be taking questions. You'll see a little chat box. Please feel free to type in your questions. And we have somebody who'll be on that will try to answer it if he can. If he can't, we'll save it for the end, and we'll take your questions at the end where I'll be able to answer it as well. And all of that is free as part of the program. So I think you'll find that to be very, very valuable. And I'm going to be I'm going to be asking you some questions, and I'm going to be saying some very shocking things. But here's the first question I want to ask you. Have you ever had a situation where you charged something on a credit card and it was more, when the bill came back, it was more than what you expected, or even worse, it was a charge for something you didn't even buy? You ever had that happen? Happened to me. I was at my anniversary dinner with my wife. I spent $80. The bill came in. I got charged for the $80, except I got charged twice for the exact same bill in the same restaurant. I was irate. I called up that credit card company and I immediately demanded a refund. Now my question to you is this: when that happened to you, what did you do? Did you let it go? Or were you like me, were you ticked off and demand a refund? Well, I want you to hold on to that feeling, because I'm about to make it a lot worse. What if I were to tell you you're overpaying your taxes to the tune of thousands? We're not talking about an $80 credit card refund. I'm talking thousands. And I'm going to prove it to you as well. Would you want to know about it? Of course you would. You know, one thing about taxes, which surprises a lot of people, and I am going to be saying a number of surprising things, by the way, and that is it exceeds what most people pay for food, housing, transportation, and clothing combined. The good news is I'm going to show you there's a nice, easy solution where you can stop overpaying and bulletproof your records from the government. How would you like that peace of mind of not having to worry about an audit because your records will be in good shape? Wouldn't that be great? Now, as I said, I'm going to be saying some very shocking things. So I want to go over why I'm qualified to be saying what I'm saying to teach you. First of all, I'm a CPA, I'm a tax attorney, I'm also a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me head rodent. I'm also been lecturing for over a quarter of a century with the Tax Reduction Institute on tax and financial matters. I'm a featured tax coach with Donald Trump when we did the Tony Robbins Wealth Seminars. I'm a best-selling author of a book called Lower Your Taxes Big Time, which I recommend to everyone on this line. But I also recommend another book that's garnering terrific reviews. It's called Achieve Financial Freedom Big Time. And both Lower Your Taxes Big Time and Achieve Financial Freedom Big Time are available on Amazon and Barnes & Noble and so on. We don't market it here, but it is available in bookstores. And I've been a guest expert, as Erik noted, on a lot of media, from Fox, CNN, CBS, and so on. And I'm not saying this to impress you. I just want you to know that I know what I'm talking about. Now, there was a study done, I think by Harvard, where they wanted to know what percentage of the population can retire with the same standard of living they had before retirement. The answer was shocking. It was only 4% of all Americans can retire with the same standard of living, which means 96% of everybody else has to either live on some form of charity, reduce their standard of living, or just keep working for the rest of their life. How would you like to be in that top 4%? If taxes are the #1 expense in this country, if you can get those down legally, you think maybe we can cure those retirement woes? Sure. But we're going to change that today. We're going to show you how to get back, how to be in that top 4%, and how we're going to be discussing some amazing tax breaks that are available to you, but things you didn't know about. And we're going to be showing you how to bulletproof your records with meticulous records so you never have to worry about an IRS audit again. How would that feel? I have been lecturing for over 30 years, and I find there's a current tax dilemma. Most self-employed individuals are either not taking all the deductions they should be taking, or they're taking more deductions, but they don't have the right documentation. Does that sound familiar to anybody? It's usually at least one of these two, and usually both of these things are handy. And even worse, if you're self-employed, you have as much as a 700% more likely chance of being selected for an audit. How's that for shocking? Because in tax law, you are guilty until you prove your innocence. Isn't that the American way? The point is that you've got the government, you have that burden of proof of showing you meet your deductions. And I'm going to say something that's going to sound kind of funny. The government is the biggest bookie in North America because they're betting on you big time to succeed. And the one thing the government has learned is from little acorns come big trees. So, for example, Apple Computer didn't start with 200,000 employees. It started out of Steve Wozniak and Steve Jobs' garage. Seriously. IBM didn't start big. The same thing is true with Amazon. Amazon, the big internet giant, didn't start big. It started out of Jeff Bezos' garage. So the government knows by passing good tax laws, and let me emphasize, there are good tax laws. By passing good tax laws, they are really being the economic engine behind this economy, and they want you to be in business. That's why there are two tax systems. And by the way, when I say there's two tax systems, I always have people saying, sure, Sandy, one for rich and one for poor. That isn't quite right. It's close, but it's not quite right. There's one to make you rich, and there's one to make you poor. The one to make you poor is designed for people who are employees and for those who don't know the rules. Because if you don't know the rules, you're just as bad off as an employee. Because if you don't know the rules, if you're an employee, you don't get that many deductions. And any deductions you do get have to exceed 3% of your adjusted gross earnings, and you have to have a threshold before you get one dime of deduction. And even worse, you're taxed on your first dollar, no matter what. Whereas if you're self-employed, that's the system designed to get you rich. Because if you're self-employed, you get to deduct everything that an employee gets to write off, plus you get to write off your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. You can set up a pension plan that makes almost any government plan look small by comparison. I mean, the tax benefits, there's no threshold you have to exceed. The tax benefit is just enormous if you are self-employed and you know the rules. And to give you an idea, so the government really wants to pass, they have passed good tax laws, which will give you deductions. And what a deduction is that it creates cash that you never have to pay back. What the government is doing is they're giving you free financing for your business. Think about that. And to give you an idea of how this works is Mary. Mary is an individual who's an employee, or she is a self-employed individual. I'm sure she's an employee, or she doesn't know the rules. She can be self-employed, but if she doesn't know the rules, she's back where she is as an employee. And she has the following expenses. Cell phone. That's normally not deductible as an employee. Self-employed people can write that off. Mortgage, she pays rent. That's not deductible as an employee. If she has mortgage interest, she can deductible as an itemized deduction. That's it. She has car expenses. She spends money on gas, repairs, insurance, not deductible as an employee. She likes to eat out a lot, not deductible as an employee. She likes to entertain. She goes to the movies, plays golf, goes to hockey games, not deductible as an employee. She has medical expenses. In the United States, that is a big threshold you have to exceed before you get one dime of medical. Now it's 10% of your adjusted gross earnings if you're under 65. And she has other expenses which have to exceed a high threshold. However, if Mary is self-employed, some of these exact same non-deductible expenses and more now can potentially become deductible. We call this, remember, these are monies you're already spending, but now they become deductible. Everything is based on this slide. This slide is the key. This one and the next one is the key behind everything I'm saying today. I've coined this concept. I call it redirected tax dollars. And here's the point. You can either give whatever you're giving to the IRS, $8,000, $10,000, $15,000 or more, or with proper planning, you can take a substantial part of that money that you're already giving the government and use it to subsidize your business. Here's my question. Which do you think is the wiser choice? And by the way, I'm using my words correctly. It is a choice. With proper tax planning, you can potentially take a significant part of what you're already giving the federal and state government and use that to subsidize your business. That's really the bottom line here. And this is really the genesis of all the slides I'm going to be talking about today. Now, here's another interesting thing. Remember I said I was going to say a number of shocking things? Who are the biggest tax cheats in North America? Do you know? I bet you never guess. Here's the answer. Business owners cheat themselves out of billions. In fact, I find, based on the seminars that I do, that small business owners overpay their taxes to the tune of billions. And we're talking tens of billions of dollars. And I'm not the only one who's noticed this. John Potter, who's the former head of the American Institute of CPAs, said that Americans are overpaying their taxes of billions. Even the General Accounting Office said this. And even worse, based on the seminars that I've been doing, I estimate that well over 95% of everybody who has a business, who's self-employed, don't think they overpay. Now, why is that? There are effectively three reasons why people overpay their taxes and don't know about it. The first reason is lack of knowledge. You don't know what you don't know. I mean, that makes sense, doesn't it? The second reason, which is, in my opinion, inexcusable, but it's a huge problem, and that's what I call procrastination. You know, if you don't have something to wake you up in the morning, like an alarm clock, you may not get up. Or trigger you to come to the seminar, you may not show up. Same thing is true in tax law. If you don't have something triggering you to write down the things you need to do, the entertainment questions, the travel questions, the automobile mileage, the things I'm going to get into today, what's going to happen? You're not going to do it. You know, in my seminars, I ask people, how many procrastinators do we have here? And I turn to the rest of them, which is usually about half the audience, and I say, when are you going to raise your hand, Amara? Procrastination is a huge problem. It really is. It's a killer of deductions. And the third killer of deductions is fear of the IRS. And the interesting thing is you don't need to fear them, because if you know what you're doing, they'll leave you alone. You know, there's a couple of cash drain myths that I want to share with you, and one of them is only 7 words long, and yet it causes more people to lose money than almost any single mistake I can think of. And those 7 words are, my accountant takes care of my taxes. And by the way, I have a similar myth. My spouse takes care of my taxes. If you learn anything, learn this. I equate this with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? That'd be nice. Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth, by the way. By the way, I want to mention, accountants to me are essential. They are an essential part of every business person. Business. But the point is, if you don't have the right documentation, if you don't have the right knowledge, there's only so much they can do for you. It's got to be a partnership effort. Does that make sense to you? Okay. Now, you know, I was at a big mega event. Some of you may have heard of me when I was with Donald Trump and General Schwarzkopf when he was alive, and Tony Robbins and a bunch of others. And I had a gentleman come up to me and he said, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. I get a refund every year. And he didn't even realize he was getting back his own money. I've had a number of people say that to me, so I actually ran the numbers. I ran the numbers on somebody who makes $50,000 of net taxable income. This is net of all your deductions and exemptions, who lives in an average tax state. I didn't pick New York. I didn't pick California. I picked an average state. Somebody makes $50,000 of net taxable income, pays $12,917 on the average in taxes. And that includes federal, state, Social Security, and Medicare. Now, withholding or estimated tax is normally more than that. Why? One, the government wants to make sure they get their money. But two, when you get a refund, don't you feel better? So even though this person got a refund, he didn't get it all back. He's ending up paying $12,917. This translates to 25.8% of their net taxable income is being paid out in taxes. And by the way, I'm not talking about Donald Trump here. I'm talking about a single hardworking individual who's netting out $50,000 a year. Somebody makes $100,000 a year, pays 32.4% of what they make in taxes, and somebody who makes $250,000 a year pays a whopping 37.7% of what they're making in taxes. So you're paying a lot in taxes. You may not realize it, but you are. Now here's another huge myth. Sandy, I've got a home-based business. What kind of deductions or fringe benefits can I take that, let's say, a Fortune 500 company can take, or something that they can offer that I can't offer? And here's the answer. You get exactly the same tax advantages that a Fortune 500 company like IBM can provide for their own employees, believe it or not. You know, remember I mentioned my book, Lower Your Taxes Big Time? I have 130 pages on fringe benefits. Almost every single page applies to all of you as a self-employed individual. Almost every single one. Now, here's another big myth. Sandy, I only work my business part-time. What kind of benefits do I get versus a full-time person? Answer, you get exactly the same tax advantages that a full-time person gets. Exactly. Now, here's a huge myth, and I don't know where this one came from. Sandy, I'm not making any money yet. Do I have to worry about tax planning? First of all, I want you to write something down, and if you have a pen and paper, you can write this down. If you're going to get this in a recording, make sure you write it down. And here's what I want you to write down. The amount of income you make or don't make, the amount of income you make or even don't make, is immaterial for tax planning to benefit you. So the amount of income you make or don't make is immaterial for tax planning to benefit you. You know, most people think you have to make $200,000, $300,000 to worry about tax planning. That is not true. Remember I said the government is the biggest bookie in North America? They subsidize you in three ways. The first way they subsidize you is if your business generates a loss. Hey, you're not making money, you have a loss. That loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 in a job, or your spouse makes $50,000, and your business generates a $10,000 loss. You only pay taxes on $40,000, then net. So that's the first way they subsidize you. And by increasing your deductions, you're increasing that loss, which means you can use that against more of your net. But let's say that loss exceeds your whole income for the year. You're a single parent, and it exceeds your whole income for the year. Well, the second way they subsidize you is you can carry back all business losses in the U.S. 2 years and actually get a refund for the last 2 years of taxes that you paid to the federal and state government. You actually get a check. Or once you carry back all those losses, if it exceeds even the carryback, let's say you wiped out all the income for the last 2 years, you can then carry forward, is the third way they subsidize you, all business losses up to 20 years and offset the next 20 years of earnings. That's why you never lose a properly documented business deduction. And tax planning is so critical no matter what kind of money you make, whether you make $200,000 a year, $300,000 a year, or you have a loss. Doesn't matter. It always will benefit you. As long as you're running your business like a business, which means trying to make money, and you have the right documentation. Now, here's another interesting question. Let's say I gave you a choice between getting a $17,000 raise every single year. You actually get a check for $17,000, or I'll somehow wave my magic wand and save you $10,000 in taxes every year, federal, state, and Social Security, every year for the rest of your life. Which would you take? Believe it or not, if you said the 17, you'd be wrong, because by the time you pay federal, state, Social Security on that, you're left with less than $10,000. You know, I think I paid $3.40 a gallon for my car. How would you like to get gas for the equivalent of free? Would you like that? Because when you write it off, that's effectively what you're getting. There are two methods of writing off a car. There's the IRS method, and there's the actual method. I'm going to take the more conservative approach. I'm going to use the IRS method, which is more conservative. IRS gives you 56 cents a mile for every mile you drive for business. By the way, who determines how many miles we drive for business? Does the government or do we? And the answer is we do. And how do we do it? we keep a tax tracker or tax organizer. That's how we do it. And I'm going to get more into that. IRS also gives you 23.5 cents a mile for medical and moving. That's why you need to also track your medical mileage. This is true every time you go to a dentist, every time you take your kids to the doctor. All your round-trip mileage is medical mileage. And here's something that a lot of people miss. This is one of the most overlooked deductions, and that is charity. IRS gives you 14 cents a mile for every mile you drive for charitable purposes. I have a friend of mine who's on his church choir. Every time he goes for choir practice, he should be claiming 14 cents a mile round trip. You think he's doing it? Nope. In my neighborhood, a lot of moms drive their daughters to sell Girl Scout cookies. I'm sure you're seeing in your neighborhood too. And they all come to my house because they know I like Samoas. Those moms should be claiming 14 cents a mile. They should be claiming a charitable mileage by tracking it. You think they're doing it? No. Remember I said many Americans are overpaying their taxes. Now, how do you get gas for the equivalent of free? Watch this. Let's say you drive 20 miles tomorrow for business. IRS gives you 56 cents a mile for an $11.20 deduction. Now, a deduction is not cash. It's an indirect form of cash. The amount of cash you get from a deduction is equal to whatever that deduction is times your tax bracket. Now, what is tax bracket? Is that the average of what you pay overall? What is it? Tax bracket means what you pay on the last dollar you make to the federal and state government. And if you get a deduction, it's how much of that deduction comes back as a refund. So we always want deductions. And there's an old song that we CPAs sing. You don't want to hear me sing, but the words are great. Everything is cheaper if you get a deduction. Cha-cha-cha. So let's take an example. The average American, by the way, is in the 33% tax bracket. That's with federal, state, and Social Security and Medicare. It could be as high as 54%, but the average is 33%. So you multiply 33% times $11.20 deduction, that's the average, that puts a $3.69 cash savings in your pocket. That's how much that $11.20 deduction is worth. So here's my point. If gas is $3.50 a gallon, and actually gas is actually less than that now, I think it's like $3.20 or $3.30 a gallon, and you get 20 miles to the gallon, you're making at least 19 cents a gallon at profit. And by the way, if you don't keep the right records, this is how much it costs you. You're losing about $120 a month in cash every month. So it works both ways. And that's the IRS method, which is the more conservative method. The actual method is usually much better, and that gives you a percentage of your gas, oil, insurance, wash, wax, depreciation. So let's say you put on 40,000 miles on your vehicle this year, of which 20,000 miles are business. In this example, 50% of all of this of gas, oil, insurance become deductible. And by the way, who determines how many miles we drive for business? Does the government or do we? And the answer is we do. And how do we do it? From our tax tracker or tax organizer. That's how we do it. Okay? Now, I want to mention a couple things. The IRS method is in lieu of your gas, oil, repairs, insurance, wash, wax, depreciation. There are a couple things that even many accountants didn't even know about. You can deduct with the IRS method your sales tax to the extent use your car for business and interest on a car loan to the extent use your car for business, even if you use the IRS method. I know someone who filed amended tax returns for the last 3 years, federal and state, to get back a deduction for their sales tax and interest. They got back over $6,000. This is not a small number here, folks. Now, what kinds of documentation do you need? First of all, you need an odometer reading showing your beginning and ending year's odometer reading. You don't need it for each trip, just beginning and end of year. Number two, you need a mileage journal for each trip you're taking. What's the mileage? And number three, and of course you need the date when you're on this. And number three, what explanation, what you have to have an explanation of the business purpose for each trip. Like this was an opportunity meeting. I met with Sadie Bodkin about tax saving or about being a distributor. You know, what an explanation. Okay. The key is you want to have something triggering you to do all this. That's the problem. Here's a hot tip. You know, a lot of times we do personal stuff, like we go to take our kids to football games, tutoring, see our mom. That's normally personal. You know, there's an old saying in Washington, D.C., where I live, where there's a will, there's a lawyer. Here's the point. If I do something personal, I'll ask myself, do I have a potential prospect near on the way to my mom or on the way to a personal stop. Maybe you can see a prospect or a potential distributor. By doing that, a substantial part of your trip to your mom could be deductible. And by the way, your mom doesn't have to live where you do. Let's say your mom lives in Hawaii. You could put ads in the paper for potential distributors, and if you do it correctly, part of that trip could potentially be, literally almost the whole trip could be potentially deductible, even though you're wanting to see your mom. Now, I want to mention there is a new rule in tax law where you can write off up to $3,160 in first-year depreciation on a vehicle. $3,160 is the maximum normally first-year depreciation. However, there are a couple of winners that allow you to write off much more than $3,160. The winners are basically new and used trucks, new or used vans, new or used, these are all qualifying trucks, qualifying vans, or new or used qualifying SUVs, sports utility vehicles. So, what is a qualifying truck, van, or sports utility vehicle? You've got to meet essentially two rules. Rule number one is it's got to have a truck chassis. That's the first important rule. I don't care if it's a truck, van, or SUV, it's got to have a truck chassis. The second rule, it's got to have a gross vehicle weight, which means carrying weight, of over 6,000 pounds. How would you know if your vehicle has a gross vehicle weight of over 6,000 pounds? You open up the driver's door. In the door jamb is a metal plate showing net and gross vehicle weight. You want to see if it has a gross vehicle weight, which means carrying weight of over 6,000 pounds. If you do, and it has a truck chassis, here's the benefit. You can elect to write off $25,000, not $3,160, $25,000 of the business use of that vehicle. Plus, you get regular depreciation on anything left over. Okay? So we're talking 8 times the depreciation, the maximum depreciation in the first year. Now let's talk about meals and entertainment. The IRS allows you to write off 50% of your meals and 50% of your friends' meals for anyone who's a potential prospect in your business. Now my question is, who are your potential prospects? Are your best friends potential prospects in your business? Sure. Can they be distributors? Sure. Can they give you referrals? Sure. How about your adult family members? Absolutely. How about your next door neighbor? Absolutely. You know, I've never met two networking professionals get together and not talk business. So everyone is a prospect. Would you agree? So my point is this. If everyone is a prospect, how can you ever have a non-deductible lunch? With few exceptions, you can't. And if you're not writing off almost every meal you have with someone, if you're paying for some of that meal and you're leaving that money on the table, if you're not writing it off, you're overpaying your taxes. Now, what kinds of documentation do you need? You need to have something triggering you in a tax tracker or tax organizer. The 4 W's and an H. Who? What's their name? What was discussed? Be specific. Where? When? What was the date, time, and how much? By doing this, you will never have to worry about an IRS audit again. I promise. And by the way, a tax tracker is kind of, like audit insurance. You all have homeowners insurance and car insurance. Why do you have that? Because if your house burns down, you get into an accident, you don't have that insurance, you're doomed. I mean, that's a disaster. With here, this is audit insurance. Your tracker's your audit insurance. Knowledge is the premium for the policy. Together, you will never have to worry about an IRS audit again. What's that worth? And unlike homeowners and car insurance, you can use it every single year and you'll never get suspended. Oh, and it pays you very, very well. I want to emphasize a couple things about entertaining. I'm sure many of you see big companies entertaining on the Super Bowl and the World Cup and the World Series and Olympics and all these other things. What's the price tag? $1 million a minute or something like that? But most small business people don't advertise on the Olympics. But the way you advertise is viral marketing, word of mouth advertising. So when you're entertaining, you are advertising. It's the same thing as if someone's putting an ad on the Super Bowl or someone putting an ad on TV. Does everybody understand that? And it obviously pays to advertise because you're promoting your business in pursuit of a profit and you're offering proof that you're running your business like a business. Now, IRS gives you 50% of your entertainment and your fun. By the way, there's something I want you to write down. It's called associated entertainment. And that's what it says in the Internal Revenue Code. Now, when I mention the word associated entertainment, most people think I have 2 heads. But it really is... It really is such a thing. And this is next to the word associated entertainment. I want you to write down the word fun. Fun. This is where you're going to a movie. This is where you're going to a play. This is where you're going to a ballet. This is where you're going to a hockey game, and you're writing off that fun. You're having twice as much fun. IRS says you could write off 50% of your fun, and if you pay for your friend, you can even write off 50% of their fun. if, and this is IRS talking, not Sandy Botkin talking, if you talk business within the same 24-hour day as the fund. Does that give you enough time? Good. Let's take an example. Let's say I go to Erik's house and we talk business, and then an hour later we drive to a football game. Is that talking business within the same 24-hour day? Yes. Let's say Erik and I talk business over lunch, and then Erik says, you know, it's such a beautiful day, Sandy. What do you say we go play golf? And I say, all right, Erik, you show me how to play, I'll go with you. I might have a 300 handicap, but I'm going. So we talk business over lunch, and then we go play golf. Is that talking business within the same 24-hour day as the fund? Yes. Here's the problem. Who determines whether we talk business during the same 24-hour day? Does the government or do we? And the answer is we do. And how do we do it? How do we prove this to the government? By having our tax tracker or tax organizer. Remember I said your tax tracker is your audit insurance against IRS. And I have people calling me up all the time. They say, Mr. Botkin, you mean to tell me that IRS will believe everything I say in my tax tracker or tax organizer? Yes. Unless they can show fraud by regulation, they must accept everything you say in your tax organizer. Think about that, how important that is. And again, what kinds of documentation do you need? You want to have something triggering you. That's what a tax organizer does. Trigger you to write down the 4 W's and an H. Who, what, when, where, why, and how much. Now, let's talk about a home office. I'll bet you heard that if you claim a home office, you'll get audited, and it isn't worth it. I'm here to tell you that, what if I were to tell you that in 1999, Congress liberalized a home office deduction for self-employed people? So my question is, if Congress would do that, why? Wouldn't that be your understanding that they'd want you to take it? Of course. In fact, I have a friend of mine who actually did a study of people who've claimed a home office versus those who don't claim a home office, and he found that they have the exact same chance of being selected for an audit, or a very close chance. So my point is, if the home office, you have the same chance of being selected for an audit as not claiming one, and Congress is encouraging you to do it, and it's worth tens of thousands of dollars, as you'll find out, then you got to be crazy if you don't take one, and you're eligible. You really do. Now, how does the home office work? Let's assume, and I'm going to give you a little overview of this. Let's assume this is your floor plan for your apartment, or it could be your home, but I'm assuming it's an apartment, and we'll assume that one bedroom is used for business, and that bedroom represents approximately 1/8 of the total square feet. By the way, I'm just picking a number. There's nothing magical about 1/8. In your house, it might be a little more, it might be a little less. I'm just, picking a number here. But what does that mean? That means that 1/8 of your home expenses now become business expenses. So 1/8 of your utilities now become deductible. Now that's an important point. This is a good example of redirected tax dollars. You're going to spend money on utilities anyway, but before you weren't deducting them. Now with the home office, you can deduct part of your utilities. 1/8 of the interest now becomes business interest. Now that becomes important because it'll reduce your Social Security and Medicare for your business. 1/8 of your taxes, your property taxes, become business taxes. The other 7/8 become an itemized deduction. 1/8 of the house could be depreciated. That could be tens of thousands of dollars. Sometimes people say, well, Sandy, I don't own a home. I rent an apartment or I rent a home. No problem. 1/8 of the rent will be deductible. 1/8 of the maid service, the alarm service, the lawn care, the snow removal. I mean, this is repairs. This is a huge deal, folks. It's a big deal. Now, what qualifications for a home office deduction? There are 3 rules. How many? 3. First qualification, you must use an exclusive portion of a room for business. Doesn't have to be a whole room. It could be an exclusive portion of a room. Now, here's the problem. Let's assume you claim a home office today, and 2 years later you get audited. How do you prove that you use an exclusive portion of a room for business? I bet you never heard that from your accountant. Here's how. Once a year, take a picture of the home office. Make sure there's nothing personal in the picture, like cookbooks and things like that. Number 2, and date, oh, by the way, keep the photograph. Don't send it into the IRS. Number 2, you want to show that you use your home regularly for business. That means at least 45 minutes a day, 4 to 5 days a week. And finally, that your home is used as your principal place of business. That means that's where you do your administrative work, your primary administrative work. By doing that, your home is your principal place of business. You work it regularly, which means you work it at least 45 minutes a day, 4 to 5 days a week, and use a portion of it exclusively. You are now eligible for home office deduction, which is worth thousands. Let me ask you another question. How would you like to be able to deduct the equivalent of your kids' college education and weddings? Would you like that? College is a big deal. IRS said that you can write off your kids, the equivalent of your kids' weddings and education, if you meet one of several tests. One way is to do it this way. Hire your kids. If you pay your kids a reasonable wage, and then they use that money to pay for their own college down the road, or their own education, or their own car, aren't you in essence getting a deduction for education that way, or cars? It's the same money, but in one case you went from non-deductible wages to the other to education. And by the way, I want to emphasize something. I've been doing this for years, and if you haven't been doing it, you're overpaying your taxes. I've been hiring my kids to work on my rental properties every summer, and I pay them a wage. They mow the lawns. They help paint the property. My daughter majored in digital design. At the end of 2 years, she was eligible to do internships, and I hired her to do my website. I had a big major web firm give me a quote, a very expensive quote actually, and then I hired my daughter to prepare a website for my TaxBot and Tax Reduction Institute site, which was something less than what the web firm would have charged me. I saved tens of thousands of dollars hiring my daughter and hiring my son, who in turn used that money to pay for their own education down the road. Same money. Here's my point. If you're either not taking all the deductions you should be taking, or you're taking more deductions and you don't have the right documentation. Hopefully I have convinced you of the horrible mistake of overpaying your taxes to start keeping meticulous records and to learn more about tax deductions. By the way, a lot of times people think credit card statements alone will work. Well, I have news for you. Because keeping a credit card, think again, you need more information than the card provides. Because in tax law, you have to prove all of your deductions were business related and that you're following the rules. Remember I said the key to getting redirected tax income is 3 sets of rules. 1, you're running your business like a business and not like a hobby. And I have a whole video on this, but essentially that means that you have an accountant who prepares financial statements for you. And if you're not making money, they'll go over the financial statements to see where you can cut back. You go to training like this, go to training using tools like Erik Luhrs tools. It's very important to help establish you're running your business like a business. Meeting with an expert in the industry like your upline who's successful, or your upline's upline, and following their advice. All of these things, working regularly your business, all of these things are important in showing you're running your business like a business. Secondly, you've got to document your activities correctly, which means you must have a good tax tracker to show that you're in pursuit of a profit. See, the government, in order to subsidize you, the government doesn't care if you're making money. I know that sounds funny. They don't. All they care about is you're trying to make money. You're running your business like a business, and you're tracking your expenses in accordance with IRS standards. They're not asking for much. And remember, you have as much as a 700% more likely chance of being selected for an audit. Let me ask you a question. How would you like to have a tax assistant who would do all your mileage logs for you, to keep all your receipts foolproof so that even if you have a flood, you can't lose them, and to keep your tax organizer and tax tracker for you for your entertainment questions and travel questions? Imagine having somebody do this for you 24 hours a day, 7 days a week. Would you like that? And you probably figure, well, that's too expensive. What if you can get somebody for pennies a day? And I'm not exaggerating, pennies. Let me introduce you to the best assistant you're ever going to find in your life. It's called TaxBot. TaxBot is a cute little creature. It's got a 4.5-star rating in the App Store. It is fully IRS compliant. And the way it's IRS compliant is you snap pictures of receipts, you answer simple questions, and it will ensure you are IRS compliant. I want to emphasize something here. I designed TaxBot for me. One thing I've learned about myself, I can't speak for you, but I know this about me. If it's simple, easy, and fast, those 3 things, I'll do it. If it's not simple, not easy, not fast, I won't do it. It's that simple. And it's funny how many people haven't learned this. There's a number of expense tracking systems out there that haven't learned that lesson. And so I designed something with 2 buttons. You cannot get easier than that. Add trip for mileage, add expense for everything else. So let me explain how this works. Let's say I'm going to have a lunch with Erik. I would click on Add Expense. The minute I do this, I get a whole category of expenses, all of which are customizable and editable. One of the categories happens to be meals. So I click on meals. The minute I click on meals, and by the way, TaxBot works on the smartphones such as iPhone, Droid, iPad, Droid tablet, and the web. So the minute I click on meals, all the tax questions that I need to bulletproof me pop up, which eliminates procrastination. So the meals is already there. All I type in is the business purpose. I type in how much, where I went, whether it's Chili's Steakhouse or my home or Outback, where I went. The date is automatically there, when and what's their name, and I am bulletproof. Now, there's also one other button that's interesting, Entity. TaxBot works, one of the things I didn't want to do is to have everybody have to buy a separate TaxBot account. So TaxBot works on up to three different businesses, three different cars simultaneously. So you can use it for yourself, you can use it for your spouse. If you have two businesses, you can do it and separate the reports. You can have it for your kids, three businesses, three cars simultaneously on one account. You don't need separate accounts. Now, the second thing TaxBot has, besides expense tracking, it has an integrated camera. A lot of times you have these receipts on thermally treated paper that fade, and that's a disaster. You have unreadable receipts, you're dead. You really are dead in the water. Well, what happens is IRS now allows you to digitize your records. In fact, they're encouraging it. So what you do is you click on Attach Receipt. You take a picture of the receipt. You'll see a little lens. You press Print. Can't get easier than that. Press. You just press Print. And then it'll ask you to save. You then save it. All of the receipt and the documentation will wirelessly be transmitted to the web. My point is, if you lose your phone, you don't lose your data. Now, in addition, TaxBot has an integrated mileage tracker with a GPS system. So you start the mileage tracking, it'll follow you along. The minute you get to your location, you click Stop Mileage Tracking. What TaxBot will do is it'll automatically give you the mileage, automatically give you the beginning address. You don't type this in. This is automatic. Automatically give you the ending address. Automatically give you the dates. It'll even do a round trip if you want, or you can turn that feature off. The only thing you type in is the reason, the explanation. That's it. And you are bulletproof. You then click Save. TaxBot will wirelessly transmit it to the web, summarize all your mileage between business and personal mileage, and with the press of one button, the word Report, you can download it to your hard drive, and you'll get a percentage of business versus personal mileage. So you can eliminate those mileage clipboards. TaxBot also shows you in real time how much you are generating approximately in deductions. Every major network marketing leader I know is putting people on this. Why? Because when people are generating 300, 400, 500, 1,000 a month or more, they're not going to quit, because this is what it costs them to quit. This is a picture of my partner's iPhone. I think he generated $15,000, almost $69 as of August 20th. What's that, about $1,800 a month? You think anybody's going to quit by generating $1,800 a month in deductions? It's never going to happen. So attrition is significantly reduced when when everyone is using TaxBot. That's the point. In addition, TaxBot will look for missed deductions. You actually register a credit card or a bank account, it will actually see if those charges are, or the credit or the check was written in, if there's recorded in TaxBot. If it's not there, it'll send you a message asking you if you want to record this, so that everything is in one place. I mean, the technology is just phenomenal here. TaxBot is kind of like a BMW. There's more under the hood than it appears. All your data, we take this very seriously, is fully encrypted, fully backed up in multiple high-security data centers in several different cities. How's that for security? Now, you also get very powerful reporting for your accountant. For example, you get graphs on what you're spending on every category, so you can use this as a budgeter. I promise you, you will be ready for the toughest IRS audit. Before TaxBot, we used to do our records, and we used to look like this. I used to have to take 3 aspirin to get all my stuff together. Today, I press one button, the word Report. Everything downloads from the TaxBot website to my hard drive. I can then email it to my accountant. So now, this is the way I look. We have found that TaxBot can be used in less than 2 minutes a day. In fact, it's been averaging less than 1.5 minutes a day. I got to tell you something. I'm a CPA and a lawyer. I'm not a salesperson. I frankly wish I were, because I can tell you that the CPAs and accountants beg people for the backup that TaxBot provides. That's the really bottom line. And in addition, don't forget, you also get, besides all of this, you get me. You get our online education library. You get over 40 videos on all kinds of topics, tax and financial, not just tax. In addition, you get 360 plus blogs. I like to write, so I have all kinds of blogs on all kinds of things. Like I just did a blog on the latest tax scams going on in North America. I have a blog on how to evaluate nursing homes for parents. I have a blog on what mortgage you should get. Should you get a fixed rate or adjustable rate? What kind of insurance you should get? There's all kinds of information on TaxBot. We had one reviewer who said you get one idea from our library, you could save thousands, and it's true. We have probably the finest education, tax and financial education library in the country. It's just tremendous. What the important point is, it's so easy. You don't need to fudge. That's the bottom line, or do something illegal. So what's the byproduct of TaxBot? You will save thousands of dollars in taxes. In fact, we guarantee it. Here's our unconditional 100% risk-free guarantee. We want you to try TaxBot for a month. Just try it. We guarantee you will get 20 times the monthly cost in the first 30 days alone. You'll average 50, by the way, but we guarantee at least 30, or you get your money back. What's that, a 2,000% rate of return? Where are you going to make that guaranteed in your life? This is a 2,000% guaranteed rate of return, okay? Our customers love it. It has a 4.5-star rating in the App Store. It is rated as the #1 expense tracking software by top 10 reviews, which I think is reviewed, which is a part of Consumer Reports. We're rated #1 in the country, by the way. We have tens of thousands of happy customers. We are recommended by almost every single real estate association across the country. We are recommended by the National Society of Accountants for their clients. We're recommended by New York Stock Exchange, billion-dollar sales companies. Now, what's the price for TaxBot? Normally, it's $19.99 a month for everything. However, Eric beat us up. It is only $9.99 a month. And it's not one of these things that will go up in 2 or 3 months. This is it by contract. It is $9.99 a month, period. The way you take advantage of it, and by the way, I do want to mention that the way you take it, it's even better if you want it for the year, where you can get it for $100 a year and save 2 months. And the way you take advantage of that, and you go to www.taxbot.com. It'll ask you to sign you up. You click on sign you up, and it'll ask you for a coupon code. You have to type in the code LEAD or LEAD, L-E-A-D, L-E-A-D. By typing in the word LEAD, you then save 50% for the rest of your life, basically. That's the way that works. And by the way, TaxBot it's not even $9.99. Why not? It's fully tax deductible. So it's only about $5.40 a month after taxes. What's that, 18 cents a day? I mean, if that's not affordable, I don't know what it is. That's about as affordable as it gets. It's really very easy for a couple minutes a day to take care of everything you need to do with the IRS. It's just much too important not to do. And by the way, for those of you who sign up in the next 24 hours from hearing this recording, you get a bonus. You get our premium version, which normally we charge $259 for. You get for free. Now, what is our premium version? You get to call and ask unlimited tax questions, as much as you want, with accountants, CPAs, enrolled agents, people like that. You get our Audit 911 service, which in case you get audited, they'll advise you what to do if you get audited. They will review your last year's tax return, like your last year's Schedule C for deductions. This is all part of the $9.99 a month, by the way. This is free. And the services are all backed by a $1 million insurance policy. Still have questions? We'll be sending you a copy of our ebook, Targeted Tax Breaks for Your Home-Based Business. We have one specifically for home-based business, so you're going to be getting that. Again, it's only $9.99 a month or $100 a year, where you save an extra 2 months, and you get the same unconditional guarantee. If you don't get 20 times that $9.99 a month, so about $200 in deductions minimum, in the first month alone that you didn't have before, you cancel and you get all your money back. Okay? That's a 2,000% rate of return. Just go to www.taxbot.com, click on Sign Me Up. It'll ask you for a coupon code. You want to put on the coupon code LEAD, L-E-A-D, or LEAD, L-E-A-D, and that's how you get the special. Hopefully, I've convinced you of the horrible mistake of overpaying your taxes, and I apologize to anyone who doesn't get this, because I must have done a horrible job, because this is just, to not do this is really silly. But the bottom line, folks, is that, do something. If you find TaxBot for some reason is not for you, you want to use another expense tracking software, you want to have a bulletproof safe in your house, hey, go for it. But do something. Doing nothing when you have a 700% more likely chance of being selected for an audit is not a smart move. You really should do something. All right, I'm going to turn this back to my partner, Jake. If you have any questions, please type them in the chat box. Again, go to www.taxbot.com, click on Sign Me Up, and don't forget to put the coupon code LEAD, or LEAD, L-E-A-D, okay? Jake, are you there?
I'm here. Can you hear me, Sandy?
I can.
Gotcha. We've got some really interesting questions coming in, and so keep them coming. Okay, first one is I own a real estate business, or I'm in real estate with my spouse, can we deduct meals together?
That's a good question. And I have a video on this. Normally, eating alone with your spouse is not deductible because IRS has a rule. It's called the closely connected spouse rule. At least it's nice for IRS to think you and your spouse are closely connected. And that also applies to if you're single and eating out with your boyfriend or girlfriend. Is there any way to write off your spouse or your significant other? Yes. IRS says whenever you entertain another couple, you may bring your spouse or significant other to keep the other person busy. I mean, how do you have a one-on-one conversation about real estate or a one-on-one conversation about some product if you have two people looking at you? So you may always bring your spouse or significant other to keep the other person busy. And how do they know you brought another person? They look in your tax tracker or tax organizer. Remember what I said? Everything you say there, they'll believe.
Gotcha. Okay, here's another interesting one. If I show up at a restaurant and just find some people there to talk to about business, is that deductible, or does it have to be prearranged?
That's a very good question. The answer to that is it has to be prearranged. IRS says that simply going to a restaurant and striking up a conversation with the waitress or the people next door will not make that meal deductible. But if you had a prearranged meeting, it would be deductible. So, for example, let's say the waitress next door wants to buy some real estate from you or thinking about your business and say, I can't talk to you right now. Why don't you come to the restaurant for lunch and we'll talk about it. So you show up around 12, 1 o'clock. You talk to the waitress about it. Now you had a prearranged meeting. Now that meeting can be deductible as long as you write down in TaxBot all the things, who, what, when, where, why, and how much. As long as you do those things, you're fine.
Gotcha. So I run a real estate business. Is there anything, or what are some ideas of things that I can have my kids do so I can hire them? And then are there any age restrictions on that?
All right. First of all, I want to emphasize something. TaxBot was designed originally for realtors in mind. We now market it obviously for other types of businesses. But it was really designed, realtors were the first target audience, so it's really designed very well for realtors. There are things you can do, like you can hire your kids to shred documents, to lick envelopes, to address envelopes, to deliver for sale signs, pick up for sale signs, work on your computer, mow the lawns on the rental properties, on the listing apartments. You know, there's lots of things you can do. But anything related to your business.
Gotcha.
Fill out your diary for you.
There you go. Use TaxBot, right? How about on home office? Can you go over real quickly again the calculation used to do home office?
All right, the calculation, we just use that as an assumption, all right? Basically, I take the amount of square foot that was in the, that I used for my home office, divided by the total square feet in the house, and that was the percentage of the home that I could write off. There's another way of doing this, and we have a video on this in TaxBot, which is called net square foot, which gives you a better deal. In net square foot, you would subtract out the common areas, the throughways, the walkways, the stairways from your total square feet. And that gives you net square foot, which is a lower denominator. When you have a lower denominator, you tend to get a higher fraction of that of your expenses. That's called net square foot method, which also is available.
Sounds good. Here's another one. It looks like this person has an office. I don't say what type of business they're in, but they have an office, and they're wondering if their mileage to and from their office is deductible.
It all depends on which is your principal office. If your home is your principal place of business, then the mileage from your home to your secondary office is deductible. If your home is not your principal place of business, there's still a way. Remember I said that was a will, there's a lawyer, there's still a way to deduct a trip to that downtown office. And that is make your stop along the way a temporary business stop. Now, what's a temporary business stop? It's more than what's this seminar I can give you, but basically a temporary business stop is something you don't do regularly. If you go to a listing appointment or a FSBO or a client or a prospect or a distributor, first you meet with them and then, or an opportunity meeting or a sales meeting, and then you go from there into your office, that entire trip, that one-way trip becomes fully deductible. So go to a temporary business stop on the way to the office will convert that one-way trip to being deductible, even if your home is not your principal place of business. But the key is to document this in TaxBot. That is the key, and to have an expense tracking software like TaxBot to be able to do this.
Okay, Sandy, we got one. Is TaxBot Canadian compliant?
Oh, good question. Yes. TaxBot is fully Canadian compliant. I met with the Rulings Directorate of Canada. It is fully Canadian compliant. In fact, you can convert, instead of mileage, you can convert it to kilometers. This is a conversion button. So yes, it is fully Canadian compliant.
Gotcha. Okay, another one about mileage. This person has a regular job, and they also have some side work. I'm not sure what kind of business, but some side business. If they are talking with other people at their office about their side business or have a specific meeting, would that be deductible?
When you say that, what are you talking about?
The mileage to the, looks like the mileage to the office.
Now, generally, going to your commuting office, like an employee office, would not be deductible if all you do is talk business with your associates. What you can deduct, however, is the lunch you have with the associates if you talk business and document it correctly in TaxBot.
Gotcha. Here's a really interesting one, Sandy. I don't think we've ever had this one before. If you deposit money into a registered education savings plan, can the monthly payments translate to the same as paying your kids a salary?
Well, the answer is yes, it is deductible. All right, but my point is, you're talking registered education savings plan is what's available in Canada. So I'm sure this person's a Canadian. The RESP is deductible when you do it to a registered education savings plan. As the registered savings, there's another one that's also deductible. But in addition, you could do that, and you can hire your kids. In addition, you can do both and get a double deduction.
Well, that's great. Does the same thing apply in the United States?
Oh, let me rephrase this. I'm thinking of two different things. There's the registered education savings plan, and there's a retirement plan, which is like a registered plan. The retirement one is deductible. The registered education one, I don't think is deductible, but when the money comes out, it is tax-free for your kids' education. But by hiring your kids, you get a full deduction for it. So I do want to emphasize that. Now what are you saying on the next question, Jake?
Okay, so with that information, I think they're asking if rather than paying them a salary, can they deduct the payments for in lieu of work if they're hiring their kid? Can they contribute to an education savings plan?
What I would do is I would hire the kids and then let them use that money. This way you get a deduction for the wages, and then let them contribute to the registered education savings plan themselves.
Gotcha.
This way you get a deduction.
That's a great one. Well, Sandy, that's about all the time.
One I got that I didn't answer. Somebody asked me, I have an iPhone and somebody has a Droid. Can we use TaxBot on we have different devices? The answer is yes. Remember I said TaxBot works on 3 different businesses, 3 different cars, and it works on different devices with one account. So I have an iPhone, my spouse has a Droid, my wife has a Droid. We both can use TaxBot on the same account. I just want to emphasize that.
Sounds good. Well, Sandy, that's about all the time we have. Is Erik still on? We can turn it back to Erik. I
am here. I'm cringing at the amount of write-offs. I'm like slapping my head and going, "Oh, I can't." And I thought I was good. It's like, wow. So thanks for the insight. And I'm grabbing my TaxBot. So I would recommend everybody else do that as well, because the carrying the notebook and the it's just too much. This kind of thing, and it really blows your mind how much money you've been giving away to the government. And there might be that little voice in your head like, it's kind of a little bit of work. You want to know what? For the amount of money that you're going to get back, for the amount of money that you're going to keep, I should say, for that you don't have to even pay, the extra 38 seconds a day is nothing in terms of labor, because if you do the math, I mean, if you're going to save, I don't know, $20 for that day, for a minute of work, times 60, what is it? $20 times 60 is what, $1,200.
It's actually better than that, Erik. We found that TaxBot generates $1 a second of documentation. So if you put in 30 seconds a day, you're talking about $30 a day in your pocket. You multiply that by $360 a day, 5 days, you're talking probably $10,000, $15,000 worth of new deductions. This is in addition to what you already have.
Yeah, that's like working 2 part-time jobs.
That's correct.
I mean, it just makes it's not even that it makes sense. It is sense. It's the sense I think everybody's been looking for. So I wholeheartedly recommend I wholeheartedly recommend that everybody get this, everybody use it. I don't even need to sing its praises. Just it's it's just simple logic. Get this thing, use it, and increase your income.
No, I'm with you. And I do want to emphasize, those of you, especially I know most of you are realtors, TaxBot was specifically designed with you in mind. I just want to emphasize that. In fact, there's a spot there called Lap where when you go on tour or you go on caravan, you can actually press it and it takes a picture of each stop you're doing, stop by stop. So I do want to emphasize that. Bottom line, folks, is that, do something. Doing nothing is really silly because IRS can hit you with substantial penalties, and that's not a smart move. If you want to use another expense tracking software, fine, but do something. TaxBot is safe for those who want something fast, simple, and easy. You're not going to get much better than this, but do something is the bottom line.
I wholeheartedly agree. Have we got anything else, or are we pretty much ready to wrap it up?
We wrap it up.
All right. Well, Sandy, thank you so much for being here, and thank you to everybody for showing up. Like I said, get this TaxBot for yourself. More importantly, for any colleagues that you have in your organization, tell them about the TaxBot. Any friends, anybody you love, anybody that you like, any friends of yours that have in some way, shape, or form work for themselves. Make sure that they get this. It's going to be a lifesaver for them. It's going to be a lifesaver for you. Anyway, Sandy, thanks again for showing up, and thank you everybody for being here.
Thank you. Let's make our lives less taxing.